What is something that you've learned while you're in the mortgage industry that you wish you would have known before?
That it's possible for anyone. I mean, I purchased my home at 23, but it was a surprise to me that I could even think of purchasing a home at that age, right? And most of the clientele that I deal with are, late 20s, 30s, finally into their careers and stuff. But it's really possible for anyone at any stage as long as they're ready and financially ready as well.
Karym, how are you doing today? I'm good. Thank you for asking. How old are you?
I am 28.
28. Perfect. And where are you from?
I have lived a majority of my life from Tucson, so essentially Tucson, but I'm an Arizona native for the most part.
Oh, nice. Now, what is your favorite thing about Arizona?
It would have to be the mountains and more specifically like Tucson mountains. I love that you can look basically 360 and there's some beautiful, majestic mountain to look at.
Do you like hiking?
I love hiking.
Do you have a favorite mountain to hike?
I don't. It's been a while since we've gone out that we have, our little girl. But hopefully we'll get back into it and start doing some hikes together.
Yeah, sounds good. So what do you do for a living?
I am a mortgage lender and I specifically help first-time home buyers purchase their home and then also build wealth with that first purchase, second purchase, investments, and we just try to help people figure out the right way to finance the home.
Nice. How long have you been doing this for?
I've been in the industry for about 3 years now. Yeah.
What is something that you've learned while you're in the mortgage industry that you wish you would have known before?
That it's possible for anyone. I mean, I purchased my home at 23, but it was a surprise to me that I could even think of purchasing a home at that age, right? And most of the clientele that I deal with are, late 20s, 30s, finally into their careers and stuff. But it's really possible for anyone at any stage as long as they're ready and financially ready as well.
Now, what is the most challenging thing about your job?
Most challenging thing I would say is navigating emotions. Sometimes, some people, you have to deliver some bad news in terms of maybe you can't qualify for this much, or, maybe your timeline's a little bit longer than what we would have hoped. So that's a little bit difficult because I get a little bit emotionally invested in people achieving homeownership. It's such a big thing. I know for a lot of people. And so just that emotional aspect of wanting to get this done for them and sometimes having to delay that a little bit so that they're in a good spot to do so.
And what is the best thing about your job?
Helping first-time home buyers. I really do love that because they're always just so grateful. And also it's just so nice to be able to help somebody get into their home. And I know a lot of people for purchasing a home is such a big thing in their life. It's going to be one of the biggest investments in their life. And to be a part of that is very rewarding.
Is there like a specific strategy? I mean, you mentioned that you specialize in financial real estate, how to maybe create wealth in a way. Is there like a strategy or like a system that you have developed?
Well, not that I've developed, but this just things that I've learned. There's house hacking, buying a home with as a primary because you're going to live in it for 2 years, make it a rental, buy your next home as a primary with a primary rate, and you can start generating wealth that way. That way you're only having to put minimum down payment of 3-5% versus what we're told of, 20% for investment. You can just buy it as a primary and use a low down payment. And then also just knowing what down payment assistance programs to help with people either when 0% financing or getting a little bit of assistance to help with closing costs. Just really thinking outside of the box for people who are right. They're in a good spot to buy a home. They just don't know how, right?
Yeah. Now, what do you think about the current rates? I mean, back then, a year or 2 years ago, they were on like 2.5, 3.
Golden.
What about
golden rates? Oh my gosh. We don't talk about Bruno here. I've talked about rates today.
Okay.
No, they're sitting where they're at. And for me, I try to be an optimist. There's going to be opportunity in every market. No matter when the interest rates are higher, when the interest rates are lower. The way I see it is the opportunity right now is because interest rates are higher, sellers are willing to give incentives in the form of seller concessions to either A, buy down the rate or cover someone's closing costs to where they're only having to worry about their down payment. And if, say they're doing a VA loan or a USDA loan where that's a 0% down payment and they get their closing costs covered, I mean, they could be walking into a home with just an appraisal fee of $500. So there's opportunity everywhere. I say the best time to buy is when you are ready, you can afford that monthly payment. You can always refinance to a lower interest rate. There's just so many ways that you can go about it later on. But if it makes sense now and you're comfortable now, you should do it.
I like that a lot.
Yeah.
I really like that. You're like, whenever you're ready, once you know that you can afford that.
Yes.
And a lot of us, we always look for that golden time to like, hey, when is the best time to buy a house? And a lot of people might think like, oh man, we have to wait until those rates come back. But I just love how you say like, hey, once you're ready to pay that, you're good to go.
Right, because at the end of the day, it's that monthly mortgage payment you're paying, not just the interest rate, right? It's that monthly mortgage payment. And then just another thing to think about, when rates do come down, everyone else who's waiting is also going to be in the market, and we may or may not see something similar of what we saw 2 years ago of multiple bids on a home and then not a lot of people getting their bids accepted, right? So we'll see. We'll see if it's a frenzy or if we can get into that, but we'll see how it goes.
Only time will tell. We cannot predict the future. So
Yeah.
Nice. So what social class were you growing up?
Social class, I would say like middle of the middle class, not necessarily rich, but not necessarily poor. My parents provided shelter, food, outings, and I never felt lack, really. And it's not that we weren't bougie, but I felt happy in my home.
Were there any challenges at any point in time?
So my father owned a business. He opened a business a couple years before the 2008 crash. And so when that '08 crash came through, it devastated so many families. And unfortunately, it hit us too, was our business. And so the upbringing that I had changed. We were in Surprise, Arizona at the time with my father's business. And so him as the provider and wanting to provide the same level of lifestyle, decided to move us down to Sahuarita, Arizona. And he did that. He still provided the same level of life and lifestyle, even after the '08 crash. And so that's why I said, I don't think we were bougie, we were poor, because my father always, and my parents, together made sure that we were comfortable in our life. But that was a struggle, seeing something that my dad really dreamed of having, and he was so set on it, and I could see how it fulfilled him to have done that. And he had done that at the age of 24, 25, so he was young, and just to see kind of that devastate him was hard. That was difficult.
Was there any life lesson that you learned there, even though you were quite young at the time?
Life lesson was keep moving forward. Have the grit, and if things knock you down, it's important to stand up. It's kind of that saying, it's not about how many times you fail, it's about how many times you get up. And that's definitely something that I learned from my parents there, because they picked us up and they still continued to provide a happy and secure life for us, despite a business failing. That's a big thing, and especially at that age, not letting that affect them, and surrendering, right? They continued on and fought.
Now, I know that your parents had a business, but would they talk about money in general?
They would. I grew up in a family that had businesses. So my grandparents had owned a business for over 50 years together down in Douglas, Arizona. And so just talks of business, talks of money, I was always around. And then specifically with my parents, always talking about budgeting, this is how much you can afford, this is how much we're going to spend today. So money was a conversation, and, kind of like what my husband experienced too, is his parents was like, we have to save for that, or, we can't get that right now, but we'll work to get that. So those kind of money conversations were had with me as a kid.
Great. Do you recall your first interaction with money?
I do. So it was specifically in my dad's store. I was really into coins, and I wanted to collect all of the little quarters that had the states on them. They were going to the register and basically pilfering, just basically going through the coins. That my dad comes and you can't just take money from the register. You're stealing. And I was like so offended. He accused me of stealing, but no, he kind of like calmed it down and was like, well, there's profit and loss. We buy this because it was a retail store. Like we buy this inventory and we sell it at a markup. We have this profit. You're stealing from the profit. You're taking from this. So that conversation kind of opened up my eyes of what money can do and what it was being used for within, my bubble of my family, right? My dad was using it to generate an income, generate a lifestyle, and yeah, just how money can be used as a tool, basically.
Did you actually get to complete your coin collection?
I did.
Yeah.
And then my brother stole it from me to buy chips or whatever. Yeah.
They cut into your profit?
They did. They cut into my profit of me stealing something. Yeah.
No, that's nice. Great story. Now, what is the best financial advice you have ever received, and who gave you that advice?
Maybe not necessarily like best golden advice, but when I went to go get a credit card at a credit union for the first time, I was sat down by the teller and he explained to me, only use 30% of the card, pay it off, like let it report, but then pay it off right after. Don't max it out just because you have this amount to use, don't use it all. So I think that was very invaluable advice because I had gotten that card maybe when I was 18, like just turned 18. I didn't know. I just knew that I had to build credit. I just knew that in order to finance a house, finance a car, to get an apartment, we needed a credit score. And I think that was pretty good, solid advice that I got from that credit union.
Yeah. That's amazing. You actually walk into a credit union and they give you really, really good advice.
Right. And I think back to like, he didn't really have to tell us that, right? He didn't have to offer that advice. And I'm very grateful that he did because he was going above and beyond and making sure that these 18-year-old kids, my husband and I were going to use this effectively and not get us into a bind immediately,
Because at the same time, it could have been like, hey, we also have this financial product that you could get. And
right. Yeah. So he definitely helped us put a strong foot forward. Yeah.
Awesome. Now, what is the worst financial advice you have ever received, and who gave you that advice?
Worst financial advice, kind of along with my husband, is like use other people's money, like with their credit card, because I think there is value in patience and saving money to buy something. And I think a credit card can be useful if you already have the money. Like like a credit card can be good when, say you want to buy something that's $500 and like you want to use the points in the credit card. As long as you have the $500 in savings already to pay off that credit card, cool. But to pay something like a really big ticket item on a credit card and then continue to make payments on that and pay interest on something that you could have possibly just had patience and paid cash for, like that's how we try to do it now, I think is really valuable and I wish I would have known that sooner. So yeah. And so the worst advice would be just to put big things on credit cards.
I like how you mentioned delayed gratification, best thing you can do.
Yeah. And essentially like that's basically it, right? Like instead of teaching or like the advice of like just be impulsive and just buy the thing with the credit card because you can, the better lesson would have been delayed gratification, save. And if you want to use a credit card, just make sure you have the funds already. Yeah.
Awesome. What is the best financial decision you've ever made?
Best one is buying our house. We bought our house when I was 23, when he was 22. And I think it was the best thing we could have ever done because we locked in a low monthly payment. We solidified where we were going to live. And also just, being able to solidify where we're going to live, we anchored ourselves somewhere where we could focus on other things in our life, right? Like our jobs and stuff like that.
Alrighty. And now, what is the worst financial decision you've ever made?
Worst financial decision I ever made? I think we both agreed, like financing a car.
And this was a different car, right? Like the one that your husband got.
Yeah, so that was him financing his car. I also had a vehicle that was fine. It was running. I didn't have a payment on it. It was paid free and clear. It just needed to be well taken care of, and it probably could have lasted me another few years before I had to finance that. So again, delayed gratification, right? So instead of wanting the new shiny car, I should have waited, just rode the wheels off of my little Altima, and saved myself a couple monthly auto payments into something else.
What car did you end up buying?
It had like a stupid little Ford Focus hatchback, not even a cool one, not even an ST. And come to find out, it has like transmission issues. It had all these, so it was just a mistake all around.
Did you at least get a good interest rate? Because your husband actually, pulled his credit too many times, but
I took care of my credit. And so when I did end up financing my vehicle, it was saying like 16,000. But I got like a 4% interest rate, and so my monthly payment was only like maybe like 250, 260.
oh, they're really good.
It wasn't bad. So I mean, it wasn't bad, but 0 or 250 a month. You know what I mean?
True.
I could have just done 0.
Hey, at least you got the car. You got to drive it. Do you still have it?
No, so we actually traded that in and got a better family car, a Tiguan that I know. Yeah, much better investment, I think.
Perfect. Is there any other worst financial decision?
Okay, so another first past financial decision I made, again, was like the kind of impulsiveness. We were living in a tiny little 1-bedroom apartment, but I was set on buying a sectional. Why? I don't know, but I bought a sectional for $1,800. It was huge, completely too big for the living room. We lived with it for 3 months, and then we were like, okay, Dad, like we're gonna move to Oklahoma because we decided to do something new. Keep it at your house, and then it just became his. So really, it was $1,800 for 3 months of couch. It wasn't even, it was just a bad decision. It was just impulsive. Yeah.
Is there a better couch now, or you guys still have that one?
No, so my dad kept it, and then he ended up selling it and keeping the profit. So no, it's gone, and
He was getting the money back from all those coins that you took back then.
Yeah, we'll just call it his payback. Yeah.
Great. Now, how would you describe your relationship with money?
I would say that I have a good relationship with money. Have a lot of intention on how to use it, budget, plan it, see it as a tool, have learned a lot from money, what it can get you, what situations you can get into if you don't handle it well. But overall, I would say we have a good relationship with it.
Great. And are you comfortable with your current financial situation?
Comfortable, yes, but eager to continue to grow and make it better.
What would be like your overall financial goal?
To achieve FIRE, which is financial independence, retire early. So for us, that's going to look like bolstering up a retirement fund, having a healthy amount of savings, and really just get to a point where both of us just do not have to work. Our main goal is basically investing in real estate, having rentals, house hack, and basically just go through and try to invest in that way and achieve that, hopefully by 40 like his parents. So that's our goal.
And you're already in this field of, mortgage lending, housing, real estate. So I think that it's perfect for you.
Yeah, yes. I had already had a lot of interest. I mean, at 21, I knew I wanted to buy a house. At 21, I was like, I want to buy a house. I told him like we're together, we're doing this, like we're gonna do this before we get married. and we actually ended up closing on our home maybe like about 6 months after we got married. So we were able to do that together. But I had a lot of intention as a young person, with wanting to always have financial independence and be financially stable. Yeah.
You sound very confident. I know that, you have a system or like a way of doing things, and all you guys have to do is just let time do its thing, and I know that you guys will get there. Absolutely.
Yeah, we've learned how to implement some processes, and it's just about being consistent at this point.
Nice. Now, if you could go back in time and change one financial decision, which one would it be and why?
It would be the financing of the car, because that would have saved me so many monthly payments. I could have put that into savings. I could have invested that. We could have used that. We could have used that money elsewhere. It didn't need to have gone to financing a car. It could have just been somewhere else,
if someone were to give you right now the $16,000 for that car in cash, what would you do with that money?
Oh, what would I do with that money? The impulsive side of me would be like, let's go on vacation. But the more logical and like responsible would be like, just invest that into either the 401k or my Roth, and just put that to work to start making more money.
I actually thought you were going to say, like, we'll put that as a down payment for another house. Not enough money?
Well, so 16,000 would be like 3% of like a 300,000 somehow. So yeah, down payment would be good. Yeah. But I'm thinking of it making more money in the long run for now. Yeah.
Nice. Alrighty, we're going to go over our first segment called Would You Rather. I'm going to give you this cylinder. You're going to have to pull 5 pieces of paper. And based on the number that you get, I'll ask you a question whenever you're ready.
All right. 28.
28.
Just like my age.
This is a great question for you, actually. Karym, would you rather own 10 investment properties in the same town you currently live or have 5 vacation rentals all over the world?
Same place I live, mainly because it would be easier to take care of and monitor, rather than, having to rely on third parties. And also I'd be able to like do my own property management if they're in, rather than having to pay a property management fee.
Perfect.
Hopefully I would see that.
Alrighty. You can just toss it to the side if that's easier. And let's go over the second one.
Number one.
Number one. Would you rather pay for everything in pennies for the rest of your life or pay double with your credit card for every purchase?
Pennies.
Really?
Pennies. I'll carry a little wheelbarrow with me everywhere and pay everything with pennies. Because yeah, I would not a card. Not double.
Let's go over the third one.
15.
15. Would you rather go to jail for 10 years for stealing $1 million, but you get to keep it when you get out, or be on the run for the rest of your life with none of the money, but you get to avoid jail?
Jail?
Yeah.
We had this conversation of like, I go to jail because you can do so much in jail. You can get stint in jail. You can learn how to sell in jail.
And then what will you do with that $1 million?
With the $1 million, and then I go buy a bunch of rental properties. Like 100% I would use, because I would want to buy free and clear. You know what I mean? And immediately have cash flow. So with $1 million, yeah, that would be either, 2 really, really nice Airbnb properties, or like 10 single family home residents, or some duplexes. I could make that fit in $1 million. I could.
Perfect. All right, let's go with the fourth one.
10.
Number 10. Would you rather have unlimited money but not free time, or have unlimited time but very little money?
I feel like if you don't have a lot of money, then what can you do in your free time other than like look at clouds and figure out what does that look like? You know what I mean? Whereas like if you do have a lot of money and no free time, you can at least kind of like work. I don't know, like you just work, get the money, and then you'll have the free time. That's the way I see it. You just save, and then you can have the free time after and have the savings and everything. Yeah. So the first one.
The first one. All right, let's go with the last one.
30.
30. Would you rather drive an old and ugly car but have a mansion, or drive a brand new sports car but have a 1-bedroom apartment?
Our family cannot fit in a 1-bedroom apartment, so it's gonna have to be a mansion and me in a clunker.
Yeah. All righty, now we're gonna go over a second section called What Do You Think? This one is the same way of just pulling the 5 numbers. This one is more about opinions and thoughts on money, so whenever you're ready.
Okay.
2. Number 2. What do you think? Is it necessary to have a college degree or education in order to be successful?
Education is important for success. Maybe not necessarily a college degree, maybe a certificate program, or even just like YouTube videos like of self-development, reading self-development books. I just think education, no matter what, is a key to success, because you can only go so far with your own knowledge. You don't know what you don't know. And so I think it's important to educate yourself on those things, bolster up your knowledge and your confidence, and go out into the world with knowledge, right? So I think it is important for success.
Excellent. All right, let's go over the second one.
25.
25. What does the term rat race mean to you, and what do you think about it?
So the rat race. Yeah, so actually I think of that movie where they're all over the rat race, but like in actuality, rat race is kind of basically having that tunnel vision that everyone has of like get to the 65-year-old retirement, collect the social security, hopefully have the 401k. And it's that within that rat race of like just make enough money to retire at 65, right? I think we need to break away from that idea. And again, have people invest in themselves and in things that make them happy, investing your time of finding tranquility and peace, whether that be through meditation, working out, being creative, to step out of the rat race. Because I think maybe our society is a little too focused on making a lot of money, but not really fulfilling ourselves with things that are creative and get our hearts filled with joy, you know.
Okay. All right, let's go over the third one.
Third, 19.
19. What percentage of our check should we put into savings every month?
So we do the 5-20-30 rule, or 50-20-30 rule. So we put about 30% away of our savings, 20% to want, and then 50% to our needs. So that's like our housing, food, utilities, all that stuff, right? We do about that, right? Yeah. So only 20% to the wants, 30 to savings, and then 50% is what we're using towards like our day-to-day insurance and all that stuff.
And you, before the interview, you mentioned that you track every single expense, every single transaction that you guys have.
I do. I have a spreadsheet and we know exactly what's coming in, what's coming out, what we have budgeted for each check. We have our savings go direct deposited automatically into our savings. So that's not even money that we see, right? We just let it go into savings, and then we just look at our checking of like, okay, this is how much fund money we have, gas money we have, grocery money we have, and then the rest is for our automatic bills that go through.
Excellent. I love how you guys pay yourselves first, and then after that, take care of the fixed payments. Mm-hmm. All right, let's go over the fourth one.
21.
21. What do you think? Is it better to pay cash for everything or pay overtime?
Well, we went through this option, right? And we just paid in cash for it. And I would say that it's much better to have had not to worry about a monthly payment, right? And just having been able to pay it in full, like all of our, what do you call them, appliances? Like I just pay for all of our appliances in cash, and we just don't have to worry for another monthly payment to keep track of. So I would say it was nice to pay in cash, but if you do have to pay something over time, 0% interest.
Yeah. Awesome. All right, let's go over the last one.
Number 9.
Number 9. What do you think? Should couples share bank accounts or have separate accounts?
So we've gone through both, where we had a, his, mine, ours account, and we still kind of do, but I think we're getting closer to just like the ours account, because we have such focused goals and we want to make sure that we're really focused on that. We know exactly where our money is going at this time. But I think it just depends on what works for the couple, right? It depends on what the goals are for the couple. I do think it is important, like if anything, at least have one shared account for similar goals and then separate accounts for separate goals, right? Or even just like whatever fund money for each person. And that way you're not worried about judgment on what you're buying and stuff like that until you guys are ready to have that communication with a shared bank account. But I think it just really depends on what your goals are.
Excellent. I have to say, you've been giving us a lot of great advice, and I really, really appreciate, you took the time today to come and have an interview with me. Finally, to wrap it all up, is there anything else that you would like to share with the audience? Do you have any final thoughts?
The big things are, live below your means, save, invest in yourself. And that doesn't necessarily have to need a college degree, but if it does, just do it with intention. And I think also that I bring it back. The best advice that I could give to anyone, or what I would give myself the advice at 18, is just have intention for your money. No matter if it's $20, $200, $10,000, have intention for your money of where it's going to go, where it's going to take you, and be very mindful of what you're doing now that you may feel a couple years down the line.
Right. Karym, thank you so much. We appreciate your time.
Lee?
Guys, thank you so much for watching. Please support the channel by subscribing, commenting, and liking the video. The question of the day is the following. Let me know your opinions, thoughts, comments, and constructive criticism in the comment section, and I will see you guys on the next video.